All right. I have that the time is exactly 1 o'clock. So again, welcome everybody to today's webinar on the Paycheck Protection Program updates. My name is Jacob Turner. I'm with the Center for Communication in the Arkansas Conference of the United Methodist Church. And again, I want to welcome y'all today. As a reminder, this is a Zoom webinar. So that means that the panelists, Megan and Todd, can see each other, but we cannot see you, and you can only see us as attendees. So what that means is that if you have any questions, there is a Q&A button at the bottom of your Zoom screen. It's two little chat bubbles that intersect with each other, and it says Q&A. If you want to ask questions during this webinar, click on the Q&A button, and then you will be able to type your question in. Again, that's the Q&A button at the bottom of your Zoom screen, the two chat bubbles that are intersecting each other. With that, I will turn it over to Todd and Megan to present today's information.
Thanks, Jacob. I'll also say that there's a couple of people on the webinar today that are dialed in via phone line, and if they have questions, if they will press *9 on their phone, we will get notification that they have a question, and we can bring their audio on so they can ask that via audio. Thanks everyone for joining us. Before we started, we were asking about how many people we thought we would have today, and we weren't certain, but we know that we like to talk about money, and so there are 95 of you that went through the rescheduled and got to this point. And I want to go back and talk a little bit about the rescheduling. You know, last Thursday, when this was supposed to happen, was the day after the riot insurrection at the Capitol, and there were a lot of other things on the news, but we were specifically waiting on final instructions from SBA, the Small Business Administration, to come out. And when we did this the first time back, was that in March or April? We were in the same situation. We were waiting for the final instructions to come out, and we went ahead and had the webinar, and then those instructions came out hours after we were done with the webinar. So we postponed it till today. Those instructions did come out on Friday, and Megan was able to take the final instructions or guidance that we got from SBA and incorporate it into this. So we're going to give you better information, and we just had to wait a couple of days to get it done. So we thank you all for joining us. We're going to talk a little bit about, Jacob, can you go ahead and go one more slide? These are our topics today. So we're going to have a background of what the Payroll Protection Program, or what's known as the PPP loan, where that comes from, and what it means going forward. You're going to hear us talk a lot about first draw and second draw of the PPP loan. The overall bill, while they're two separate bills, the loan program essentially is one continuous loan program. And so if your church has never received a PPP loan, you would be applying for a first draw. If your church has received a first draw loan and gone through all the requirements and had it forgiven, spent all the money, then you would be, the second act allows for a second draw. And we'll get into more of that in a little bit later. But the PPP second draw eligibility calculations and how it can be used in the forgiveness of that, along with a timeline, and then what to do to get prepared. So if you have not had a first draw, or you have and you are looking for a second draw, what do you need to do in order to get your church ready, so that you can be available for those funds? And then a few last updates Megan's going to fill you in on. Next slide, Jacob. So the CARES Act, which is the original act, was signed into law in March, the end of March 2020. And the purpose was to help individuals and businesses during the pandemic. And it was a broad range of things that went into the act, but the specific one that we're talking about today is the PPP, or the Paycheck Protection Program. And this allowed businesses to obtain loans, and the loans are based on the average monthly payroll cost times 2.5. And then if the money was spent on payroll or other approved covered expenses during a period of either 8 weeks or 24 weeks, depending on, well, they kind of came back and added a rider on the end of that bill. But if the loan was paid back as described, or the money was spent as described, the loan would be forgiven, and then it would basically turn into a grant. The first draw. So PPP first draw updates. The second act that has been approved, the Consolidated Appropriations Act of 2021, was enacted December 27th of 2020, and it included updates for the first round of PPP loans. So if your church has never gotten a PPP loan, they could qualify for a first loan still. There's more money available. And the Small Business Administration has issued regulations regarding this act already, and we've included that. You can go to the sba.gov website if you want more information on that as well. And then there's a simplified forgiveness process for loans that are under $150,000, which most of our churches would be in this category. It just makes that whole being forgiven for your payroll using the money as directed. It makes that process much simpler. And then there are additional expenses that are eligible. And Megan's going to talk about that a little bit later as well. Next slide, please. So with the second draw, again, this is if you've already got a loan and paid it back, and it's been got a loan, spent the money, and the loan has been forgiven. So you've completely completed the process. You've received notification that the loan has been forgiven. You could be eligible for a second draw. Now, there's a few more stipulations than with the first draw. And so these are specific for second draw eligibility. So no more than 300 employees. I don't think any of our churches have to worry about that. You have to have received a loan previously and used it, or will use the funds from the PPP first draw. So if you can't get a second draw without getting a first draw, which doesn't really make sense anyway. So you would, if you had not received one, you would be asking for a first draw. You would have certain time to pay that back, and then you could come back for a second draw if needed. But for those churches that have gotten money, paid it back, and it's been forgiven, or spent it and it's been forgiven, then you could come and qualify for a second draw. The biggest hurdle that you're going to have to overcome is this gross receipts from a quarter in 2020 are more than or are 25% less or more, I believe is what it says. So what does gross receipts mean? Gross receipts would exclude any revenue recorded by your first loan and any kind of pass-through funds that your church would receive. So essentially, kind of money for the overall operation of the church, probably would include or could include money for food pantries. We're not real sure on that, but I would suggest at this point you need to include those unless we get better guidance on that. And so how that works is you have to add up all of your receipts, total gross receipts coming in from all sources for a quarter. So whether it be the second quarter, third quarter, fourth quarter of 2020, and compare those to the gross receipts in that same quarter in the prior year. So if April, May, and June of 2020 were 25% less than April, May, and June of 2019, you are eligible, or you could be eligible for a second draw. If you don't have any one quarter that's less than 25% in gross receipts, you're not going to be eligible for a second draw. Churches and religious organizations are specifically mentioned as eligible, but we still have to fall into these same other restrictions that are listed. Next slide, Jacob, please. Same type of calculation as the PPP first draw, which means you take your average monthly payroll and you multiply that times 2.5. Salary payments are capped at 100,000. So you average monthly payroll, but if anybody on your staff is making more than 100,000, you have to cap that at 100,000 to get that 2.5. And your average monthly payroll from the 2019 calendar year or from the year immediately previous to the application date. So at this point, that would be 2020. Is that correct, Megan? Yeah. And this would include your UMPIP, your CRSP, both DB and DC contributions. Those are considered part of payroll because they are direct benefits for your pastor. Okay, moving on.
I'll take over. So this new law relisted the same eligible uses as the 2020, first draw PPP loans could be used on, but also added some additional ones there. So I want to go over the old ones that you could spend your first draw PPP on, and that is any salary costs, but capping salaries at $100,000 annually. Also other payroll costs like the UMPIP contributions. You can apply your defined benefit and defined contributions to the eligible uses here, but not the CPP, because it specifically only mentions health insurance premiums, and CPP is death and disability. Rent or lease payments that you've made during the covered period, which again is 8 or 24 weeks, whichever you choose. Mortgage interest payments and utility cost that you've incurred during that period. And Jacob, next slide. And these are some newer eligible expenses you can have. One is a cost of a business software that you've paid for, or cloud computing services, software that allows you to work from home. All of that can be included as an eligible use now. Also, if you've had to put any safety measures into place at your churches, they specifically mention drive-through windows or ventilation systems, physical barriers. There might be other things that our churches have done to their buildings to make sure that they're safe for people to use. Those can be included as eligible uses for the PPP second draw and first draw if you haven't used it all yet. Any expansion of indoor or outdoor spaces. I know some of our churches are doing an outdoor parking lot service or something like that. Any type of changes, costs that you've incurred to make that a reality can be included as an eligible use here. And like I said, these expenses all need to be within an 8 or 24 week period from the date that you received the PPP funds. So that is the one caveat, is if you did any and all of this or paid for some of this, then it needs to be within that eligible time frame. And the eligible uses are important because this is what allows you to make sure that your loan is fully forgiven. So that brings us to the next slide, Jacob. So the forgiveness criteria for the second draw loan is the same as the first draw loan now, now that this law has been enacted. And of course, applications are submitted to your local banker. They will then work with the SBA from there. To have your loan fully forgiven, you have to spend 60% of those funds on payroll costs. So that includes the salary, benefits that are paid, UMPIP contributions, that sort of thing. And then the remaining 40% can be used on those other eligible expenses that we talked about. Employee count and the payroll costs during that period do not need to decrease 25% or more. If they do, then it's possible that you won't have your loan fully forgiven. However, I've noticed the longer we come out of the CARES Act that was issued in March of 2020, there's more and more safe harbors that are being issued to help companies with this. For example, if your doors were closed temporarily, you can have a little safe harbor there, as long as you know that you will be rehiring those employees once your doors do open back up. If you've made good attempts, good faith efforts to rehire someone for a position, but have not been able to find someone willing to take it at this point, that's another safe harbor. You won't be penalized for that employee decrease. If someone was fired for cause, you're not penalized for that. If someone retires, you're not penalized for that. So this is solely a decrease, basically just a complete workforce reduction. That's what they're trying to get at here, is we don't want to fully forgive loans if there's been a workforce reduction greater than 25% or more. Loans under $150,000 are only going to need to provide a certification for forgiveness. I'm not sure how many of you have actually submitted forgiveness applications at this point. The conference has submitted ours, and it was a very lengthy application process, and the purpose of this is to help smaller businesses and organizations kind of not have to wade through all of the administrative detail that's in that original application. So the SBA has been given, I believe, 24 days since the law was enacted. So I think that'll be around January 20th. They have that long to have this new loan forgiveness certification for first draw PPP loans or second draw loans. That'll be available. Those will still be submitted to your banker as well. When you apply for a loan and for the second draw loan, if it's less than $150,000, you do not have to provide documentation of the 25% decrease in revenue quarter over quarter. However, that will be required. I have may here, but it's now been changed to it will be required when you're applying for forgiveness. And I think that's just to make sure that they keep everyone accountable and don't want to give loans to someone who can't prove that they did have a decrease in revenue. So if your loan was under $150,000, you'll need to provide the certification and also show that you had that revenue loss in 2020. Okay, next slide, Jacob. So I wanted to put together a timeline. I know there's a lot of moving parts here, and I've actually got some updates since I put this slideshow together. So last week we received interim final rulings from the Small Business Association, and that gave us a lot more detail of what eligible uses and forgiveness will look like on a logistical level. Applications are now open today for first draw PPP loans. So if you haven't received a PPP loan and you think that you need to, you can apply today with your banker. On Wednesday, you can apply for second draw PPP loans. That is, if you've used or plan to use all of your first draw you can apply for the second draw with your community banker. And then a few days after that, they're going to let the larger banks submit applications for the second draw PPP loans. As we saw with the first PPP loan in the CARES Act, there was lots of guidance that came out after, more clarifications and simplifications, and we're expecting the SBA to send out additional guidance in the next couple of weeks, and I'm sure that will just continue on until the program's finished. Speaking of, the deadline to apply for the second draw PPP is March 31st, 2021. So we've just got this first quarter to get these loans. Okay, next slide, Jacob. So what can you do to prepare now? First is, if you have received a PPP loan in 2020, you need to make sure that it's either fully forgiven, or if it's not, you plan on it being fully forgiven. You've used those funds on all the right eligible expenses. You have 60% of those expenses going towards payroll costs. You want to make sure that all of that has been as finalized as it can be. And remember, if those loans are less than $150,000, you should only have to submit a certification to forgive those first PPP draws as well. And then next, start comparing quarter over quarter from 2020 to 2019 and see if you have a 25% decrease in revenue. The SBA has actually come out and said if it's simpler for you to look at this on a calendar year, you can. If you want to compare all of 2019 to all of 2020, you can. Their reasoning is that if it over the full year you had a 25% decrease, then you probably had a 25% or more decrease in one of the quarters. So go ahead and look at that and see if you can pull together documentation to prove your calculation, because that will be needed. Either at the time of application or at the time of forgiveness. And then I would go ahead and communicate with your banker. Let them know that you're interested in the second draw PPP loan. I would ask them if they're going to have their own application. I know the SBA sent out a generalized application form, but some banks were using a modified form specific to their bank. So I would just go ahead and get on their radar and make sure that you're getting everything you need to be ready to apply for that loan on Wednesday or in the near future. Next slide, Jacob. So in this act, there were some other updates to some of the items that were originally brought up in the CARES Act in March. And one is there is a charitable contribution tax deduction update. It's now through the end of 2021. You can record charitable contribution deductions whether you're itemizing or not. So that just might be something good to remind church members that this is a tax benefit that they have in 2021 when they're considering giving to your church. Another is there's an extension of tax credits that are available. In 2020, if you had an employee that was out because they had to quarantine or they had COVID themselves, they were taking care of someone with COVID, you can pay them if you had, I believe it was 500 or less employees, which would be our churches, and then recoup that salary payment to them through your quarterly 941 filings, through your payroll taxes. You would essentially receive a credit for that payroll that you paid. If you did need an advance from the government to pay that payroll and didn't want to wait until the quarterly filings were issued to get reimbursed, you could submit a form 7200 to get that money in advance of paying the employee. And that's extended through March 31st, 2021, rather than December 31st, I mean. Another item that's not listed here is, and I don't know that many churches did this because the conference didn't really recommend it, but you could defer payroll taxes in 2020. And before, with the CARES Act, you had to pay 50% of that by the end of 2020 and the rest by the end of 2021. That's now been pushed back a year. So if you did defer payment of payroll tax expenses, you now owe 50% of that in 2021 and the remaining 50% by December 31 of 2022. So that's just something to keep in mind. Like I said, we did not recommend doing that because you still owe that money later on. And I think that's it for the other updates. So Jacob, next slide. So next, we just wanted to ask if you all had any questions. Is there anything we can help clarify from any of these slides or from something we didn't talk about?
So Megan, the first one that I see here is small churches that one of their biggest expenses is insurance, but it's property and liability insurance. That is not included in any of the calculations, either in how much money you can get or the payback. Is it?
No.
Yeah. That is, health insurance is, but property and liability insurance is not. That's
no
specifically excluded. Is there qualifications for what kind of documentation will be required for the decrease in revenue?
There's not anything right now. I think the SBA is leaving that up to bankers to decide what they want to gather. That's also why they mentioned if it's easier for documentation purposes to compare year over year, you can, because most people have calendar year reports that are more easily available than quarterly reports. But for now, I would try and just make sure your financial records are in order, and you'll probably just have to give them internal income statements for each quarter. I know I've seen that bank statements possibly might need to be provided to show that less money came in deposits. But at this point, that's still unknown, and it might vary from institution to institution.
If you didn't apply for and get monies during the first round of PP, but are interested in the second round, does the 25% reduction in revenue apply? So if you haven't gotten a first loan, you're still going to ask for a first loan. So right. The 25% is not apply at that point.
Right.
However, whoever is applying for the loan, and in the conference's case was me, you have to certify that your business has been severely impacted due to COVID restrictions. And I believe it actually says financially impacted. And so you're going to have to show that, at least at this point, especially, that you are impacted in some way financially, at least be willing to assess to that in some way, shape, or form, which I think all of our churches can prove that, because we've been shut down on a regular basis for quite some time. So, but no, it does not have to be the 25%. Correct, George. So if you did not take part in the first round, you're going to be asking your banker for the first round draw, or the first draw. Just basically tell them you want to apply for a PPP loan and that you have not received one prior. Can you elaborate on recouping payroll expense for COVID qualifying leave?
So that is something that you usually will be reimbursed for. And there is a place on the 941 where you can record COVID-related leave, and that will then create a payroll tax credit for you. I don't have any of those forms in front of me, but I'd be happy to put together a memo or something that we can email out to help clarify how that's done logistically. There, like I said, there's the option to, if a church is struggling, to get that money in advance to pay the employee, because it can take a while before you file your quarterly 941 and recoup that. So, so that's also an option as well. That might be something we want to put together to email out.
Sure.
To the
And
group.
the leave had to be for, and correct me if I'm wrong, Megan, the employee had to be sick, or they had to be caring for a loved one that was sick, immediate family member that was sick. And so therefore they were in quarantine or something along those lines.
Yes, or even just general quarantine if it was required by the Department of Health. Mm-hmm.
Right. Okay. Can you apply for the second loan if the first one has not been closed out?
You can, technically. They say you have to have used or plan to use all of your first draw funds before you apply for the second. So I would imagine most loans 24-week covered period has ended at this point, and you've probably used all the funds. You just maybe haven't applied for forgiveness. And I know some banks were even holding off on forgiveness on the lower loans because they knew something like this simplified forgiveness was coming out. Yes, as long as you've used those funds and you're pretty much at the point where you're ready to file for forgiveness and you know you'll be forgiven 100%, you can apply for a second loan.
And if you don't hit that 25% and you've applied, the loan is going to stay a loan. It's not going to get forgiven. You're going to have to pay it back. Is that correct? Okay.
For a second draw loan, yes. If you got a loan and it was under $150,000, so you didn't have to prove your decrease of revenue at the time of the loan, yes, that would not be forgiven.
Yeah. Okay. News article that income tax returns should be used to document the 25% receipts reduction. Churches do not file income tax returns, so what's the suitable documentation? Correct. Most nonprofits would file a 990, which but churches are exempt from that as well, which is why Megan said that we're just going to turn in income statements to our banks and let them go from there.
Yeah, I would plan on putting together quarterly income statements and then also compiling your bank statements to show that cash in for that quarter that you choose to show the 25% decrease. You'll have to somehow try and help them reconcile between the cash receipts coming in on the bank statement, I would imagine, to that income statement. We're a difficult organization to work with for banks when it comes to proving this stuff. So we found that out with the first PPP.
Yes. Another question, our church would not meet the 25% decrease, but our daycare would meet the requirement. Since the overall enrollment has decreased substantially, the two entities have separate set of financials, but they report and share the same FEIN. Should we look at a second draw? That's a great overall question, is how daycares work in general. So first of all, this is per EIN. So if you have a federal electronic identification number, or employee identification number, you're one entity when it comes to the government. So if the two entities together can show a 25% reduction because there's just one EIN number, then they would qualify. But if they don't, then they both don't qualify. Is that what you would think as well, Megan?
Yes, yeah. It's like a company. You can't pick and choose which departments didn't do well during the year to decide what your decrease looks like. You have to look at it as a whole, and it's possible that together you still have a 25% decrease for that quarter.
After you fill out your forgiveness paperwork and your bank approves it and you sign it to be submitted to SBA for forgiveness, how long until you get notification that you're forgiven, and how do they notify you?
Well, Todd and I can speak from experience on this because we just had our first PPP loan forgiven in December. We went through our banker only and submitted the application, and it took probably a couple of weeks. I could tell they were verifying information we sent. They had some follow-up questions. They had some final certifications for Todd to sign. It took a couple of weeks, and we were notified by our banker, our local banker, via email that our loan had been forgiven. I'm sure each financial institution will do it a little differently, but your banker will be the one to notify you of that.
And we had actually paid back some of the money because the 2.5, we were really just dealing with payroll. I mean, our rent for office space is not that much, and so our loan amount was going to be more than we could show expenses. And so we had paid some of the money back, and then the law got changed, like the day after we paid it back, because we didn't want to incur any interest on it. We were on a deadline of when we needed to pay it back before we incurred interest. So we did that correctly, and then the law was changed, or the interpretation was changed of the law. And then our bank and SBA came back once we approved it and said, you actually are eligible for this money to be back. And so they deposited the rest of those funds back into our account, which was very great. I mean, it was several $1,000s, wasn't it, Megan?
Yes.
I think we are done with all the questions. There's a lot of people want more information on this. They would like to send the slides or some sort of flyer, and we will get that sent out through our communications team. And then anything else?
Yeah, we can put together hopefully a one-page reference sheet on all of this that we can send out. And I think we had Todd and I's emails up there. Most people know what those are. Feel free to reach out to us that way with specific questions.
And contact your bank, because they're the ones that can approve this. I would say if you've gone through a bank before for a loan, then go back to that same bank. And if not, then whoever you have a relationship with, get started with those local bankers, because they're the ones that can get you access to these funds. And that's all the questions I see. So I think that's it. Thanks, everybody. I hope to answer questions via email or phone calls in the near future if you need it. Thanks, Megan. Thanks, Jacob.
Thank you. Bye.
Bye, everyone.